and resident trader Alejandro, and our special guest coming back for a second appearance is Kenny Guerrero. Kenny, thank you so much for joining us again. Kenny is a strategist, consultant, a trader, as well as the founder of the ecomway.com as well. But Kenny, thank you so much for joining us. Alejandro, thank you as well. Appreciate that, guys. How's everyone doing?
Yeah, doing good.
Yeah, everything's great on this side. I'm excited to be here. Thanks for having me. I'm really excited to go ahead and drop some trading nuggets, right? Some tips and tricks that I use and my team uses to trade Forex pair. But like I said, trading and Bitcoin and Forex and any other currencies on the chart, they virtually work all the same, right? There's some things that are slightly different. For example, like pip sizes and distance like that. But the same techniques and the same, skill sets that we use to trade Forex pairs, we can use it to trade Bitcoin. So I have a couple, pointers here that I'm going to actually work through on the charts, and you easily be able to see how you're going to be able to implement, that Forex concept to trading cryptos.
Nice, right, dude. Yeah, hell yeah, man. Definitely excited to pick up some golden nuggets from a seasoned trader. Absolutely.
All right. Cool. So I can go ahead and get started here.
Absolutely. Yeah. Go for it, man. Do you need the screen share or just on the camera? Fine.
Go ahead and share my screen. You should be able to see my chart here.
Got you. Loaded up. Perfect.
Okay, so TradingView is one of the best trading chart, software, right? Charting software that we have. We have virtually every pair you can think of. I like to look at a lot of crypto pairs on here as well, right? So on my list, we have Bitcoin, and of course, we are the blockchain center. Bitcoin is really, really big. So just 1 second while this loads up. Cool. So the first thing that I want to go ahead and go over with you guys, and you'll see here, just let everything load correctly. Awesome. So what we have here is pips, right? What we call in the Forex industry is pips. And this is a measurement of distance, right? We can measure distance with the amount of pips. For example, so if I travel from where price is currently at, and I just travel down, let's say price ends up falling, right? We can actually see that distance here, if I zoom in, be 910 pips, right? We do use 2 decimal points right here. So you'll be able to measure, okay, how far is it from current price to a projected price or your stop loss, right? You want to know that distance because it's going to be key and vital to your risk management, right? This here is extremely volatile, and that's why a lot of people stay away from trading cryptos, right? As opposed to just buying crypto and letting it sit in your digital wallet, right? You can actually trade cryptos. So this right here is a massive, massive move. Keep in mind, this is, this one is now, from here to here is 1,200 pips. If I go to something similar and try to mark up that very same distance, we're now only dealing with 365, right? So that is a key difference when you're trying to trade cryptos. You definitely want to be able to identify, okay, how far is this distance in reality to trading? Because it's a lot different than just exchanging $1 for a portion of crypto, right? Here you can bank a lot off of just this drawdown right here, right? This moves pushed down to the downside. That there was roughly about 1,500 pips. So if you put that in terms of trading, right? So now we've covered tips. If you put that in terms of trading and you trade a lot size, which is the smallest lot size you can trade, 10 cents, right? And you multiply that by 1,500, Now, I'm going to use my calculator here, but you get 1,500 times 10 cents, you get $150. Makes sense, right? Easy math. But
Right.
if you start to increase that, for example, and you put a $1 lot size, right, which is a 0.10, well, now you're dealing with 150. I mean, 1,500, right? And it could just increase. For example, you can put a $3 and a point 0.35, which is $3.50 a lot, right? And your outcome comes out to that's over $5,000 just by putting $3.50 per lot, right? And don't get me wrong, as much as you can make a lot of money, you can also risk a good portion of your account if you're not executing good risk management, right? So that is one of the key differences in terms of trading and in terms of actually going into the charts and diving into what these candlestick means. It's all virtually the same. What differs is this distance in pips, and that's where you can either it's going to make a difference in your trading style and how you approach the charts, right? So one of the things that I'm going to go ahead and go over today, right, is actually, how do we start looking for entry points? How do we, really look at some good areas to take action from, right? And I'm gonna go ahead and go from the weekly, right? What we like to do is do a top-down analysis, right? A top-down analysis is us looking at the higher time frames and diving down into the lower time frames to be able to grab more information, right? If we're able to grab more information, we're a lot more precise and we can have way better entries and protect our account, right? Because the smaller our stop loss is, right, the smaller the distance that you're willing to let it breathe, or the distance that you're saying, okay, if price goes against me, right? At what point am I going to be cut off, right? At what point am I going to say, I want to get out of this trade? So if you're able to cut down that size, you're going to be able to see more returns because you can increase your lot size and you'll be able to get more pips out of that initial move, right? So let's go ahead and dive into how do we start looking for those really, really good entries, right? And keep in mind, I am looking at a Forex currency pair here, but you can apply this to cryptos, you can apply it to stocks, you can apply it to any currency pair, as long as you're looking in this candle formation, right? There's a lot of different hollow candles, there's line graphs, right? But you want to be applying this to standard candles. Awesome.
Right.
Let's go ahead and, well, okay, great. How do we start looking for entry points, right? How do we know price is more likely to reverse, right? What we look for is, in this case, if we see price take a big push down, right? We see this move that started pushing down. What we can do is we look for that last green candle before the push down. This is what we like to call as a point of interest, right? This is our point of interest, or POI, right? Our point of interest. This is where we're really looking at. This caught our eye, right? This is what we're really focused on. We were looking at that last green candle before the push down, right? So if we look at another example right over here to our left, we can see we have another point of interest, right? We see another green candlestick, nice green candlestick before the push down, right? Now we know where we're focusing in, right? We're focusing on this area. What we like to do with that point of interest is take a horizontal ray, and we are going to mark the bottom of that green candle, right? We're going to put a horizontal ray right there, and we're also going to eye up 50%. I'll zoom in here. 50% of this candle, right? going into 50% of this candle is it'll give us a more pinpoint area to go ahead and look closer to what price is doing in this area once it reaches that area, right? So we have our two areas that we're going to go ahead and mark up. We got the bottom and we have the middle of it, right? I like to just eye it out, right? You can actually take the ruler and you can measure, okay, this is actually roughly about 100 pips. So I'm going to put it around the 50 pip area. You can do that. It's all preference. I like to just eye it out. Kind of makes me feel like Superman. But it's any way kind of works for you, right? So we're looking at this here. And what we're going to do is now start going into the smaller time frame, right? Because we're going to refine this. This is like your first draft. This is your first attempt at finding that good entry. Let's go ahead and refine it now by going into the daily, right? So we're not even focused. We're not focused on what price is currently doing. We are focused on what price did in the past, right? So cool. We start to see that not only have we have this area here, but can we identify another point of interest within this area? Yes, we can, right? We can look at this right here, which is that last green candlestick before the push down, right? So all we do is now we adjust and that becomes our mark. And we can have move this one up here to 50% of this candle, right? We're just doing that exact same process. We're looking for that point of interest and we're marking up the bottom and we're marking up the 50%. Awesome. Now that we've done that on the day, let's go deeper into the 4 hour, right? The smaller we go into our time zones, the more precise and more accurate our entries are going to be, right? We want to start from the outside in to get that overall direction, right? To get that overall, see where momentum is likely to go. But once we start diving in, notice this, right? This is that same area, but now in the 4 hour, we can start to pinpoint even more points of interest, right? So notice how this point is really that last green candle before the push down, right? So that's what we're really, really, really focusing on our for our entries. So if we're looking at this area and this area produced a lot of sells, right? A lot of selling pressure in the past, we can expect that if price comes up in the future, it will rebound off of one of these two areas, right? It will rebound off the first one, or it'll break through the first line and then rebound off of the second line and then continue its way downward, right? So at least we're giving ourselves now specific areas where we're going to look for entry points, right? We can go even even smaller into the 1 hour and see what's going on in that area. Right, it never hurts to just refine and refine and refine. Right, the only thing that's going to come out of it is better entries, honestly, and you'll be able to understand that area in which you want to work with. Right, so that same area, I just had to scroll a little back. Right, see if we have any questions here. Risk management is key, spot on. This content is heat. Awesome. Great. Glad you guys are enjoying it. So let's go ahead and actually look at this right here. Let's just scroll in a bit. And we can pinpoint even more to a T. Right. Now, okay, my thing is just lagging a little bit. Cool. So the thing with going too precise, right? Trying to be too spot on, price may not actually hit your level that you want it to hit, right? So that's why we base this on general areas, right? This already lets me know, okay, since we're working with this area, if I go ahead and extend this here, and this is a really, really cool tool. If you're using a rectangle, right, and you actually go to the coordinates and you press a 0 and you okay it, oh, it's the other way, okay. If you take off the minus, and if you take off the minus, it will just extend it all the way through and you'll be able to see that very same area, right? Oh. So we now have that very same area and we can just trace it back. And look how price reacted beautifully off of just that very first level. So I'm going to zoom out to the 4-hour.
It's pretty amazing.
Right, I'm going to zoom out to the 4-hour just so you can see, okay, which level exactly did it touch? And you'll be amazed at how clean, right? It's just taking some time to scroll in. Yeah, might have already done it.
But yeah, it's like reacted right on that exact level, basically.
Yeah. So, we have the 4-hour point of interest, right? 4-hour will give you really, really good points of interest. You go to the 1-hour, it's going to be pretty decent. You're going to start to get a little more accurate and more pinpoint. But let's just take off this. It reacted right off of the beginning of that candlestick. So now let's understand why, right? This is gonna blow your mind. So the reason why price is likely to react from this level here is we have to understand how banks and institutions trade, right? Banks and institutions are, in this case, buying to sell. I'm just gonna get this. So they're buying, right? They're buying to sell. That means that whenever they buy this green candlestick, right? In our trading, if we buy and price goes down, we're in negatives, correct? We're seeing drawdown. What banks purposely do is they'll buy and then they'll sell. So that means they're keeping this buy trade open and they're willing to go in negatives, but they're still backed by all of this sell, right? So as price is dropping, as price is going down, they're keeping this negative trade open. They're then going to, in the future, come back, drive price back up, right? They're going to drive price back up to this level right here, and they're going to close their buy position at break even. So they never really lost money. They were just willing to go in drawdown this entire time just to be able to manipulate price and drive it back up so that when price does come back up, they know exactly where they need to get out, right? So they get out for their buy, they close their buy, and now they're full on sellers now. Now they're able to close this up. They no longer in drawdown. Banks are now coming in really, really hard for the sell. And that is why we started to see this type of reaction from that level, right? It's just simply because now we understand how that one green candlestick, right, to us, it's just a green candlestick. But to the banks and institutions, it's a specific area where they can now close those trades and be able to bank off of the next trade, right? So to the retail trader, to the novice trader, they're not aware that this area exists. They're not aware that this line exists. But to banks and institutions and professional traders, they're banking on this right here, right? They're just waiting for price to come back because they know banks are going to close their position and drop price, right? It's not 100% certain. It's not always going to do that every single time, but it is very, very likely that whenever you reach a point of interest like that, price is going to react and start to turn over, right? Awesome.
So just a quick question, Kenny. So that line in particular, because I'm familiar with support and resistance, so that has nothing to do with either, or is it? Because I'm still trying to understand pips.
So support and resistance, Alejandro, I'm going to, that is retail trading, right?
Okay.
That is this style. I'm not saying it's bad or anything like that. You can really make a lot of money. This
Sure.
right here is more of an institutional standpoint, right? How
Gotcha.
banks are trading. So banks don't use support and resistance. Banks don't use trend lines. Banks don't use, all of these tools. For example, look at this trend line right here, right? That was easily broken, right? So banks don't use any of that. They go more on institutional movements, which means like institutional candles, right? Candles that they created in the past, and they're able to, oh, well, that's an institutional candle. That's where we got in. we're going to drive price back up to this specific level so we can close this buy and then come in for the sell, right? So if you were to think of it of a support and resistance kind of way, you would now think of this like, okay, if price is coming up, now this can act as a resistance.
Gotcha. Okay.
Right. So that's how you can think about it. Yeah, this line now becomes a resistance for price coming up, right? Which it could very well break, right? It's a resistance. It can easily just break through. But you know, very often you'll find that it's going to respect that resistance, right? That point of interest, and start you know, going in the opposite favor.
This is all new to me. I just wanted to recap because I had no idea. Like Forex to me, I'm still like 0%. So this is just wow. Like I never even knew that there was institutional. Teach me more, man.
Yeah. So like, you know, this is how, you know, banks are able to manipulate, right? And this is not to say that they are manipulating because they're moving and pushing price, but they're not necessarily out to get us, right? They just happen to know this little extra info, right? That, for example, and this is a really clear example, right? If you're looking at this right here as a retail standpoint, you're thinking price rebound from here and drop. And then once it comes back up here, we have this resistance that should, you know, should send price back down.
Right.
You know, we have, you know, that's a concept. But if you zoom out, right? If you zoom out, now you're starting to see what banks are seeing. So banks know that a lot of people are going to come in right here. So what are they going to do? They're just going to drive price straight up, hit everyone's stop losses. And then, you know, that's where you start to see, oh, banks are manipulating. No, they're not really manipulating. They're just, they know where the real target is. And it's up to you, right? So if you're able to train your eyes and to start to look for that real target, you'll start to see, okay, maybe I am entering where retail traders are coming in, right? And you know, 90% of traders out there, I was at 1.2 a retail trader, right? Using trend lines and support and resistance. But once I've been able to switch the flip and start thinking in a more, okay, maybe how are these institutions thinking? What are they looking for, right? I can then begin to understand what's more likely to happen or where I should enter from more, right? Great question though.
Cool. What time frames are you paying the most attention to? You said the 4-hour mainly?
Yeah. So I'm looking at, for overall direction, right? We started on the weekly. You want to go to the higher time frames to really find out, okay, what is price likely to do? So if we were to draw something, you know, like a trend line, you know, it's not evil to draw a trend line, right? If we draw a trend line, now we can see from the the weekly standpoint, okay, well, we're approaching this trend line, right? So we could very well see, you know, price kind of go down. So the higher you go in time frame, look for it as only as a directional standpoint, right? Look for it to give you some form of direction. And then going into the daily and 4-hour to really start looking for those points of interest, right? You know, once you can identify those last up candle before the drops, right? And this can easily be applied to on the downward way as well, right? Like if we look for points of interest, well, this can become a point of interest as well, right? We're on the 4-hour. This can be a pretty decent point of interest, which means this is the last red candle before the push up, right? So we're looking for those very last moves before, you know, an impulse move, right? A big push. So if we were to mark this one up, we can easily go to the top of that red candle, right? Because as price comes down, we can expect it to have some form of reaction, right? We can expect it to do something like this. And we can also grab the middle of it, right? Because we're always going to grab two of them. So we grab the top and the middle. And now if price doesn't react from that very first one, well, we know we can potentially see a react from the second one, right? But you know, the daily, the weekly, definitely use that for overall direction. The 4-hour and daily time frames you can use to start mapping out your points of interest, right? Where you're going to start to look for, right? Awesome.
Definitely just learned, more in a quick 30 minutes with you than, the constant stream of YouTube and Instagram trash ads that say,
Right.
here in my garage in my Lamborghini, learn to day trade, and like you look into these
Yeah.
courses and it's just all bullshit. So I definitely appreciate like actual content and like learning stuff that we can actually practice.
You know,
Exactly.
this is raw cut. If you learn this right here, this little strategy right here will speed up your learning curve immensely, right? And it took me a while to really get my hands on this information. But for you guys, you know, it's all love, right? So another another really cool, right? And this is also going to blow your mind, is what's known as liquidity voids, right? Liquidity voids are moves that we see happen a lot in the market, right? Another way of thinking about liquidity voids are what we see, and you may be more familiar as gaps, right? Gaps in the market. Gaps
All the
from
time
the
when I'm
over,
trading. Yeah.
right? From Friday going into Sunday, you know you can expect a gap, right? This right here, what I'm about to show you, is how you can trade when you see those gap moves, right? So liquidity voids are essentially gaps in the market. What do they look like? They look like exactly like this. Very strong, quick one candle moves that show little to no resistance, right? Notice this move up here was a lot more gradual. It came down, it was going up, it was testing areas. As opposed to this one, looks like, it looks like a pole. It's just, it's very, very, very quick moves, right? Very quick moves in the market are quick moves are short-lived. So when we see quick moves with no resistance, it's almost like a red flag, right? To institutional traders. It's like, okay, did this move actually happen? Is it backed by buyers, right? Is this move legit? And very often what price is going to want to do is trickle back in, testing all of these levels, right? Trickle back in, testing all of these levels, right? Just to find out, okay, well, is this area here legit, right? Is it can it actually support some buyers in here? And very often, the chance is no, right? Because what this move here specifically was generated by news. So whenever we see a really quick impulse in price, we can see it in the U.S. when we see it in the U.S. when, for example, Trump drops a tweet, right, and that just rockets.
Yep. All the time.
Trump gets on his phone and he tweets something nasty, or he tweets something about China, whatever it is. He dropped a nasty tweet, and or a good tweet, right? It could be a really good tweet saying, we're really close to a deal. And this actually happened to me, right? Is when we see those fast moves in the market like that, that should automatically, most of the times we're not going to be able to grab it, right? We're not going to be able to, catch those moves. They happen so quick. We don't, unless we're really, really preparing for it, we're not going to be able to catch that, right? So have we missed out on the opportunity to make money? Absolutely not. I love trading these a lot more than actually catching that impulse move. A lot of people think that that impulse move was the move, but in reality, it's not. The real move is shortly after that impulse move, because shortly after that impulse move is when we're going to start to see some form of consolidation or range, right? Or some form of stall, right? Price is stalling at a certain level. When we start to see that happen, that's game over. That lets us know, like, all right, cool. Price is going to start to want to retrace at least, right? What we can target. For example, if this was an impulse up and we missed the impulse up, but we know that it created a liquidity void, right? We can visually see liquidity void. We can now start to prepare for the sell. We start to prepare for the sell by looking at consolidation. Is price consolidating, right? Price was consolidating here. Price was consolidating here. Is price stalling? Is it ranging? Answer is yes. Great. We can now start to prepare to target 50%. 50% of that liquidity void, right? So 50% becomes target number one. Where do we target, right? Where we can remove part of our remove part of our trade here and close some profits. And we can also target the full move, right? Because it started from down here. So now price is likely to retrace, drop down. If it rebounds from here and goes up, great. That's a cool possibility. That's target number one. We've made some money. But another target is if price continues, and actually drops through and then maybe rebounds from here. But we've been able to capitalize from all the way up here, which is 170 pips. So I'm currently in this trade right here. I was able to snipe it right from here. And I made money this morning, cut some of the profits because I started to see this, right? And this, from price did rebound from here up. But now that we're starting to fill in this liquidity void, my targets become a lot more clear, and I'm looking to probably target down here. And maybe even, like, honestly, if the real target is like down here, right? Somewhere around this level here.
Do you have any estimate as to what percentage is actual humans trading versus what percentage is just robots and AI
Algos, yeah.
reacting to Trump's Twitter? Like,
The freaking algos, man. Yeah.
That's a good question. A lot of it, and that ties in a lot to pinpoint entries. Like when I'm talking about entries, I'm talking about entries that are 3 pip stop loss, 4 pip stop losses, right? With all the computed animation, right, and not animation, but all the automated trading systems that are out there, right? What happens is, for example, we'll just look at this area right here. We'll look at this area right here, right? This right here, we're looking at this. So let's say the way a computer operates, right, and the way these automated systems operate is they're already on a system. They're saying if price does this, do this. If price does this, do that, right? So a lot of the times what banks will do to kind of offset these trading robots is, for example, and this is actually pretty cool that they do this, is so if the robot is programmed, right? If the robot is programmed to do this, break above, buy. Right? If the robot is programmed, after they see this move, right, the program starts to do its calculations, and it says, okay, if we break above this right here, we're gonna buy. Banks literally spike that so the program can trigger. It will get triggered and it'll buy, and then they'll fake out, right? So a lot of the times, if we can identify, like, okay, this right here will probably trick or catch computer programs. And this goes into the 1 minute, right? Because a lot of them are trading off of the 1 minute, 2 minutes, 3 minutes, small time frame. So if we're able to kind of get a visual of like, okay, this might trick the robot, that could be a good entry for me to do the opposite, right? So a break above here can trigger me to sell, right? Because I know, okay, you know, this kind of happened. And that takes a lot of skill, to be honest, to be able to do that and kind of see the schematics and see what, you know, okay, these 1 minute candlesticks printed like this, right? So I'll explain it even better like this, right? If you're seeing this on your screen, on the 1 minute, price goes up, and it's just doing this. Just ranging, consolidating, right? What do you think that computer has now gathered from this information? They've gathered, if price breaks above, it's gonna skyrocket, right? This is now a resistance. If price breaks above there, it's gonna just keep shooting up. Right?
So the computer, sorry to interrupt, the computer may think it's a doji. Like it's kind of just like, you know, it's gonna possibly move up, it could go down, I guess, right? Or
so the computer is more so like, you know, their algorithm is thinking this. If even if it picks, right? Because that's how small and minute they kind of they operate. Even if it pokes out just a little bit, they're coming in for the buy.
Just spin. Okay, got it.
Right. So even if it just breaks a little above here, boom, they've been triggered and they are automated to come in for the buy.
Gotcha.
But a lot of the times, what that false little spike up is a fake out, right? That little false spike up is really just to trick the automated systems, and then it goes down.
Exactly. Yeah. Gotcha.
So if we're able to identify that range, or you know, on the 1 minute even, and we're able to see that spike up, like I'm already trained to kind of be like, oh, that spike up on that 1 minute, boom, that's gonna produce some nice sells. Let me come in for the sell, right? And it's at beginning, it's a little tougher, right? Because you're seeing a lot of noise and you're seeing a lot of candlesticks, but it becomes easier and the concept gets engraved where you're starting to see it as traps. Like if you can start to see price as traps rather than money on the screen, and you're just able to think of like mousetrap, right? If you're able to just point out all the different traps, well, now you can avoid all these different traps and you're able to make money by avoiding the traps, right? That's how the market takes your money, is through these traps, right? So if we're able to identify these traps, you'll be able to make money. Victor saying, loving this content. Shout out to you, Victor. August OPM. My OPM fam is on here. That's love.
Money, let's go.
It's a different way of just looking at the markets, right? And I just want to, we have about 20 minutes left. I'm gonna spend the next 10 minutes.
We're good, man. Like I'm still trying to absorb all this because, like I said, the Forex, the pip side is still brand new to me. Like you said, I'm more retail. I do the resistance support on a daily, and this just like brand new, and I'm just like mentally taking notes and good stuff. I love it. I want to learn more.
Awesome. This is definitely a different approach, right? And I like it because it's worked for me from day one. So if we go to something more familiar, right? I know you're probably from, the Discord, maybe might be looking out into oil, right? Oil is notorious for this trading style. It's notorious for producing liquidity voids, just back to back liquidity voids, right? So if you're able to for example, I was teaching this earlier a little bit too. If you're able to identify liquidity voids on oil, those are easy trades. It's almost like the money just spitting out money to you, right? Because even though you didn't catch that oil move, right? We didn't catch the melt. Oh, we're beating ourselves up. You
Right.
can easily catch the push back up, right? Especially if it's a legit, looks very clean, like a liquidity board, right? This move down is no different than the move we just studied, right? Than this move over here. It's really no difference. And if you can see, price is now starting after its little stall. It looks like it wants to start breaking through to the downside.
Break it
Right?
down.
It's no different than you taking that same approach to this, taking that same approach to oil, right? It's you're just training your eye to look for liquidity boards, right? And if I just scroll back, I can clearly see one right here. What did we see? I think it's gonna keep. I caught it. Right. What did we see? We saw that melt, but what also we saw a period of consolidation. Right. We saw a period of resting, a period of price just gathering. It's almost like if you look at price, it's like think of it as a sprinter. Right. If a sprinter just sprinted all of this, they're going to be tired at the end of that sprint, right? They're going to
Of
want some
course.
water, want to walk it off. That's no different than price. After a big sprint, you can expect some tiredness, some catching of the breath, some wheezing, and then it'll start to sprint again, right? Same thing that price does. Drop, consolidation, we now can target, right? And this one just happened to play out the full thing, but even a target of 50% of this liquidity would have produced some nice buying opportunities, right? And we can just look at this one, right? They're just examples after examples. This huge liquidity void, super, super quick on oil, spiked up, right?
Mm-hmm.
A lot of people were probably bummed out that they missed on this. How are you supposed to catch this? It happened so quick.
Exactly.
Right?
Yeah.
And a lot of times it's unexpected. We just check our phones and then it's there. But that is like a green light for us, right? That in itself is setting us up for our real move, right? So right after that, price kind of came back up to retest this level up here. But up here is when it began its stalling, right? It began its consolidation. And then from there, very, very simple, target 50%. Notice how it reacted a bit from that 50%, but actually ended up fulfilling the entire liquidity void, right? So that and it just kept pushing. So from that point, you could have even capitalized even more. But
it just sorry to interrupt. It just amazes me how uniform the moves are because as far as I'm aware through charting, like pennies and even blue chips, the moves don't seem as even. Maybe I just haven't looked, but with Bitcoin and for what you're showing from oil, it's going literally a pump up and then it goes either 50% or 100% down. Like it's almost like magic. Like it's predictable. If I'm understanding correctly, like what? Wow.
That's how it moves. That's how it moves, right? So like look at this here. This right here could have, if I go to the day, it's just going to be either one or two very big candlesticks. I should have looked that up. But right here, this is where we're at, right? So two really, really big candlesticks that's just flushing down, flush. Awesome. What do we see after that? Consolidation period. Great. What do we target? 50%, and then the entire move.
Right there, 100%. Like it's wild how it's either 50 or 100. Let's just. So why didn't I see this before?
And that right there, man, is just a really, really, really simple and quick way to be able to, it's just a really, really great way to just incorporate that into that in itself can be a strategy, right? That and it's just looking for liquidity voids, right? Can be a strategy that you can incorporate into your own, right? But it's just training your eye, which is not difficult. I'll show you. I could go on days, and I'll just show you one more example.
Not
right?
perfect. Thank you.
Not difficult to USD CAD to identify these, right? And I like to go to the 4 hour, right? Just because I know that we get some really good liquidity voids, and they're very easily identified, right? And I'll just zoom out here, clear everything. Oh, I shouldn't have cleared it. So here we are, right? So we're actually looking at this here, right? That right there in itself, if I zoom in, is a liquidity void, right? To the naked eye, it's just a strong move down. But since we're not seeing any reach, right? It's just one strong push down. That in itself, liquidity void. What do we see? Similar to the move that we saw earlier, consolidation, maybe a push a little deeper, right? It might have had a little more steam and like, all right, I'll try it again. But eventually, it's going to want to target 50%, and if not the whole thing. But check this out. This is the great part about this example, right? One liquidity void. What did it do to fulfill this liquidity void? It created another liquidity void. And this was one of my favorite trades in December that I took. It's simply because it was liquidity void after liquidity void. And now we can treat this as the most recent liquidity void. So what can we do at that point is target 50% of that, and then the full thing. So it's like, we're just reading what the market is giving us. And now 50% of that was filled, and now the entire thing was filled.
And then there's
right?
it's freaking. You seen this,
And
Matt?
then it's just an endless.
Checking out some.
This right here, like, look at these huge just melts, right? And it's just all of this, right? If I go to the daily, you begin to see 50% and mark out 50% that way. Awesome. Just see some comments there. Yep. So, just to recap over what we went through, right? Just today, we went over points of interest. Amazing for our entries. We went over liquidity voids. Voids. We went over the difference between reading Bitcoin and Forex pairs. Like, there's really no difference other than the pip change, right? Pips. Think of the pips, the distance, right? That is really the biggest difference. And also keep in mind, cryptocurrencies and Bitcoins, since it's not banks and institutions that are actually moving price, keep in mind that price is not exactly going to react like that from points of interest, right? Points of interest react perfectly like that because we know who's behind it. We know it's banks and we know it's institutions. So we know what banks and institutions are looking for. Bitcoin, on the other hand, they can, it can add for, it can be used as a good basis. But it's still a little trickier because it's not like we're banking off of banks and institutions. We're actually, this right here, point of interest, kind of reacted really nicely, right? So price kind of just pushed up, came back to that point of interest, and then pushed up, right? And then from here, right, even this, man, look at this, right? We see 1, 2, 3 points of interest in this level, right? This is 10,000 area, very highly seen. But why did it get that reaction a couple of days ago so much? Yes, halving and everything too, but it's also because of what price was already printed, right? It also had this point where it came up 50% of this candle and just dropped, right? So if I go into the smaller time zones, I'll probably be able to identify the exact reason why, right? And that's, where were we? Yep. So we went over, a good amount of information there. I want to open up, the last 10 minutes to be able to answer any questions that we may have, and, kind of just go over anything else that may be in your back end.
Yeah, please, in the YouTube comments, whoever's well, hopefully everyone's still here. Ask any questions for Kenny. But I guess I'll start. Okay, yeah. So like, I know you have your own YouTube channel, right?
I have yes, I have my own YouTube channel. Let me go for you because I am planning on delivering a lot of free information on there, whether it's setups, whether it's trading tips, whatever it is. I'll go ahead and drop that link, my channel. And I actually started getting started. This one right here is probably 3 months ago, but it's probably one of the biggest returns that I've had, so I had to record it and post it. But I'll go ahead and drop it.
Scott, some questions. But I'll just say this, so I have a chance before the stream ends, but I would legit pay for the stuff. So just FYI. But
way to get in contact with me, and I'll answer Scott's question, is through Instagram. Right?
There you go. Okay.
And
that's why we only give you guys an hour of free content. I mean, Kenny is out here dropping nuggets here.
I do a lot of free things on Instagram. I do a lot of trade setups, a lot of tips through Instagram stories. So if you follow me and you look at my page, it's mostly me. But if you gotta tune into the stories, and you're gonna get a lot of value. But yes, I'll go ahead. I actually dropped the link there. My Instagram is actually at creator.cito.
Yeah, I think I'm already following you, but I have to double check.
Awesome.
But yeah, Scott, I know Scott had some questions. So
cool. What did we have here?
Scott is saying, what's your favorite trader and who do you follow for the best signals?
My favorite trader of all time, and I don't even have to hesitate about this, will be, one of my mentors, and his name is Mauricio Ceballos, right? He's from out in LA, phenomenal trader, absolutely amazing when it comes to institutional trading. I'll go ahead and just type in his name if you want to look him up on Instagram as well. Mauricio Ceballos, and his just
perfect, nice.
But his Instagram is Mauricio.tfx. TX4. Cool. So very, very, very great trader. In terms of who do I follow for the best signals, I'll be honest with you, Scott, I don't use any signals. Simply because I at some point I did, and I'm sure there are a lot of them. The only thing is that with these signals, and if you use signals, great, you're making money, you can be making money. The only thing with these signals is they don't provide the small enough stop loss that I personally like or need, right? So their stop loss could be 70, 80 pips. But if I trade independently on my own, I can be ranking up stop losses for 5, 10 pips, right? And my returns are now, most of theirs, and I'm not trying to knock them at all, is 1 to 3, right? 1 to 1, the risk reward is 1 to 3, max 1 to 4, right? The way we trade is more so banking in 1 to 20s, man, 1 to 25s, 1 to 30s, right? And 2 weeks ago, we actually it was like 3 weeks ago, we had a 1 to 50 return, right? And that's all by going into the smaller and smaller and smaller time frames to be able to get that pinpoint entry. A lot of these signal services are mass producing trades. So you don't get a lot of quality from mass production, right? Which means for them to be able to cover themselves, they have to pad the stop loss. They have to do it, right? Because at the end of the day, they're going to be like, well, you didn't follow our rules. You didn't follow our stop losses. So that's the reason you're not profitable, right? And, it just is what it is. You want quality, more quality, better trades. I would consider kind of weaning away from the signal service. And seek me out, man. I'm on Instagram. I'll get you right. I got you right, Scott. Got you, man.
There you go.
Yeah, I just got to get the needle back in my arm. 1 second with the Bitcoin analysis. Just anything for one more hit of that hopium. I mean, what's your take on Bitcoin right now? Not being able to actually close above 10K and not being able to close above 10.5K. Also, I do want to point out, I got to share my screen here, a very interesting scenario that might play out with the difficulty adjustment. As we
Right.
know, a ton of miners were overclocking to squeeze out that last bit of profitability immediately before the halving. But right now, I think the difficulty is about to adjust in, I want to say, maybe 2 hours. We're a little far behind right now. So we're almost 138 blocks behind. I mean, we should have mined 2,135 blocks by now. We've only found 2,007. So the next difficulty drop is expected to be around 6%, which is not the end of the world, but not the best news ever. So I just wanted to see if you had any perspective or any insight on that.
For sure. So I'm just gonna go ahead and re-share my screen here, just because the
Yeah.
charts are.
Let me get rid of mine, and I'll pull yours back up there.
Hey, you can see mine now.
Yes, I got
You
you.
can see the Bitcoin.
Yep.
Awesome. So in Bitcoin, right, and this goes for every pair, really, we have what is known as psychological numbers, right? And from Bitcoin, you already know 10,000, 9,000, 8,000, 7,000, right? 7,500, maybe 8,500. These are psychological numbers because the mass or a lot of people, majority of the people, like taking action from these whole numbers, right? They'll feel way more better about their trade if they take it from 10,000 as opposed to if they take it from 9,764, right? And it makes sense, right? We feel more wholly, right? We feel more complete by just something that is a little more, let's say it's a little more, we feel like secure, right? It's something we're more familiar with, right? We'll rather take action from 10,000 rather than 9,780, right? So what is my thoughts on now? Being a technical trader and technical perspective mostly, right? And you just showed more of like the fundamentals and what's going on behind the end, right? But if I'm looking from just a chart perspective, I'm looking at this right here. I'm looking at this points of interest, these points of interest that are now starting to react, right? So if just a quick breakdown, right, is just looking here. I know I have this point of interest here, and I know I have this point of interest here. I know I have this point of interest up here, and I'm gonna go ahead and go into the 4 hour just to make sure I'm looking a lot better, more accurate. Can I go ahead and identify some of these points more accurately and cleanly? If you can stop scrolling. Okay, we're almost there.
Mhm.
Okay, here we go. So now that I'm in this area, cool, I got my marks up. Now let me go ahead and refine. I know I have this one right here, 4 hour. I know I have this one to look out for. Okay. And those would probably be the two that I'm looking at. Now let me go into the 1 hour. So just seeing a reaction, right? Just a reaction that we saw from 10,000 and this level being here is kind of more of a confirmation for selling, right? I personally will not be buying Bitcoin right now until price is able to drop down and then rebound, right? You want to buy low. This is price is super high. You don't want to be pressing that buy button on right now, right? Personally, that's what that's my opinion. I'm not saying don't buy it, don't chase your dreams, but this is what I'm looking at, right? I'm looking at this here, which is 10,182, and this over here. So these are probably the best entries we would have gotten to sell. And I'll just put this one up here just in case. Right. So just from looking at this area here, we know that. Where am I putting this one here? Probably put it here. Yeah. So these right here would be the best options for itself, just off of going off of technical analysis, right? So what did price kind of come up and do? So we're not there yet, right? We're not totally there yet. So we're not at the 10,000. Did we break above 10,000? Yeah,
a few times, but it was pretty short lived, and I don't think we never got above 10,100. So
I can expect a push up above this level, right, to clear all of these. Right, we still have this trend line here. I can expect it to push up a bit more, potentially tap into these areas, and then really start it's go down. So I personally wouldn't look at a break above 10,000 as a perfect time to go ahead and buy. I would look at it as a perfect time to start looking for those sells, right? Because what we see here is a short-term trend line. Short-term trend lines are traps, retail traps, right? Short-term trend lines are meant for the momentum to be broken. So just seeing this trend line coming right here and it's struggling and it's coming down, and look at this also. The distance between every time it touches the trend line, it gets shortened. It gets shortened and shortened, right? That is also another sign that price can potentially be thinking about breaking.
Right? Now, at the very bottom of the trend line, where's the price at? I can't really see it from this. Like right there where the cursor is.
8,000.
8,000. Okay. Yeah. That's when people are asking me, like in the trading group, oh, should I buy now? Should I buy this? I'm like, okay, not investment advice, but I say like below 10K, don't do it above.
Right. So
that's hashtag not investment advice.
If we could see another rebound, like somewhere down here, and it holds, I would consider buying. At that point, I would consider buying. But to buy from all the way up here,
right?
It's not, in my opinion, a good idea.
The FOMO zone.
Yeah, that's when FOMO starts.
I think we could definitely pump above 10K again, no problem. But the real question is, can we actually close above 10.5? And then, once you're actually above 10.5, then, 12K and even 14K is back open. But, I mean, still pretty bullish right now. I mean, the price collapsed pretty fast from 10,000 to 8,000, and we've basically gotten back that entire dump. I mean, we're just hanging out right below 10K. So definitely interested to see what happens around 10K. Shout out. Oh, did you want to say something, Alejandro? I was just going to shout out Pravi real quick.
Oh, that's what I was going to do. Yeah, I have one more question, Kenny, but I want to get Pravi's question in. So he pretty much wrote, have you looked at pair trading or other ways to hedge BTC trades?
Have you looked at pair trading or other ways to hedge Bitcoin trades?
Yeah.
So, you also, and maybe what you're looking at is, looking at other coins. So like Ripple, actually trading Ripple, actually trading, Ethereum, right? For example, if you think Bitcoin is going to drop, all the rest of the altcoins are most likely going to follow suit. So to hedge that, maybe think about buying Ripple, right? And maybe think about buying Ethereum or Litecoin, whatever other altcoin, right? Because if Bitcoin is likely to drop, and it's going to bring the rest of them with them, right? And that's just Ethereum, Ripple, the most more popular ones. But if you're trying to hedge Bitcoin, go ahead and buy another altcoin, right? And maybe use a little less money or use a little more money to buy those and wait for those. So that's how I would probably hedge Bitcoin.
Nice. So my question for you, Kenny, was so no, I mean I don't want to I believe your prediction right there of it going back down to 8,000. Unfortunately, I don't want to believe it, obviously, but my question is, after the halving, all the miners, apparently, I read that in order for them to break profit, Bitcoin has to be at least 12,500 or something.
I'll be honest with you, Alejandro. I have no clue
Oh,
how
okay.
miners work. I see it all the time. Get this for a quick mine, or you can be mining as you're walking.
Right.
But I have no clue how that works, man.
I guess, yeah, my question was, like, I guess the miners as of right now, after the halving, like before the halving, in order to break profit on Bitcoin, Bitcoin had to be around 6,800. And now,
Mm-hmm.
from what I'm reading, Bitcoin after the halving, because the rewards are cut in half, the
Whoa.
Bitcoin has to be at least 12.5K in order to break even or something. That's what I read. I don't know if I'm.
So it kind of goes up just by like the double. Yikes.
Yeah.
Good luck. So they're gonna be holding for a while.
That's what I'm thinking. I mean, they must not be. They must be bleeding money right now. I'm assuming. You know,
Yeah.
if that's the case.
I mean, the
Yeah.
halving definitely knocked out any small scale miner that was still like clinging to life and just
Right.
trying to basically
The
break
Dunzo.
even. I mean, after the halving now, like you need a large scale operation with a serious amount of capital to even make it work.
Right.
It's
Right.
so definitely keeping a very close eye on this next difficulty adjustment. Like I said, it's going to be about roughly -6% in difficulty. Hopefully, we don't get the minor capitulation death spiral,
Right.
but I mean, I think it's completely normal after an event of this magnitude where the reward does get cut in half. The small scale players are going to get wiped out. They're going to get wrecked. They're going to get crushed. So definitely
Well,
expecting short-term decrease in hash rate. Yeah, go ahead.
I know we're over, but one more question. And Kenny, I don't know if we spoke about this last time. Same with you, Matt. But okay, so Thursday, when that happened, when Bitcoin went from literally 10.2K down to 3.8, would you say that Bitcoin is finally being treated or seen as an asset like gold is? People are just transferring into fiat, or do you think that was just some sort of gap fluke? As kind of like what we were not fluke, but as kind of Kenny, you were talking about the pips. Do you think it was just people just turning into fiat, or do you think it was just manipulators on that Black Thursday?
I'm not sure whether the Black Thursday incident would be exactly the reason for this, but I think that now, since the US dollar is taking a lot of dump, right?
Yeah.
It's a center face for, one of the worst currencies that it's just being honest. It's other currencies are becoming more of a powerhouse, right? So as the US dollar does begin to lose its value, I do believe that with gold and other safe havens, right? Because we have CHF and we have the yen, other safe havens, I do believe Bitcoin can become a safe haven. I don't know if it's done it yet, or I don't think it's done it yet. To be honest, I think there's too much skepticism for right now. Maybe like a year or two, or it can really, really, it can really become a safe haven. I think it becomes a safe haven. I would like to use it as a safe haven. To be honest, it's just easier than buying. You can't really physically buy gold really anymore unless you have a plug for it. But I would like to use it as a safe haven for sure.
No, you're right, man. Like I like to think of myself as a red-blooded American. I like my dollars, but damn, I cannot see how the dollar is not going to suffer through inflation. So you're right. Maybe the yen, the euro, hell, maybe even the yuan. But I would like to see Bitcoin as a safe haven. And regarding your gold comment, yeah, I don't know who has a safe anymore to store gold. I mean, I guess you gotta like. So
I got some physical gold, but I'm definitely not going to sell it to you. Sorry, guys.
no, that's fine. It's fine. Most gold now is bought through like ETFs or something. So it's not even like you owning gold. It's just you owning like the shares or the rights through fiat. So it's like
you can't even get your hands on physical
Really
right now. The physicals, it's just way too hot. But I mean, I think we can all agree, like, the decline of the dollar has already started. Like it's no joke. It's no surprise that countries are hoarding gold. They're working on their own digital currencies. They're teaming up with other, powerhouse nations to create an alternative to the dollar. People are sick and tired of using the dollar, and when you double the monetary supply with the touch of a button and you're just printing trillions, it's just a matter of time before either deflation or hyperinflation catches up to us. So
Every single time when I see an article saying the Fed has an unlimited money supply, we have unlimited powers, whatever, I'm like, okay, is there something I'm missing on the MIT or Yale or something level that I'm missing in terms of macroeconomics? Or is it the fact that we're saying the Fed are saying we have unlimited printing power and therefore we don't give a shit about inflation? My gut's telling me the latter, but I'm thinking, am I missing some quadratic or some a quantum equation that I don't know? Like what?
Probably not. Man. I'm still trying to figure it out. Every time I look at USD JPY go up, I just question. What can this be? What could possibly be driving the dollar to go up right now, other than that magic button that we have to print more money?
Exactly.
QE forever.
QE forever. Jesus, I thought that was over last recession. Nope.
No, it's time to run it up even more than the last recession.
Man.
Definitely crazy times we're living through. Thank you guys so much. Thank you, Alejandro.
Yeah, thank you,
shout
Kenny.
out to Kenny.
Thank you, Matt.
The content you provided here for our viewers, it's invaluable, man. So thank you to Kenny. Thank you, Alejandro. Appreciate you guys so much. Thank you.
And please make sure to follow Kenny's Instagram, because if without him, he wouldn't have brought you this content, damn it. And make sure to follow Blockchain Center on Twitter and Bitcoin Center as well.
Thank you, guys. Thank you for having me. Look forward to tuning in with you guys again in the near future.
Yes, peace. Guys. And please smash that like button. Every time you don't hit the like button, Craig Wright claims he is Satoshi. So please hit the like button. Thank you, guys. Thank you.
All right, thanks.
You.
Appreciate it.
Tuesday.
See ya.
Peace.